Welcome to our channel. If you have a stock you'd like us to analyze, please let us know in the comments below. Your support helps us improve our content, so consider buying us a thanks to help us upgrade our equipment. Today we're diving deep into APVO Aptevo Therapeutics Inc., putting its stock under the microscope. If you're ready to analyze the stock from every angle, let's get started with a comprehensive breakdown of its recent performance and what it could mean for investors. APVO has experienced significant volatility over the past 3 months. The stock started around 3.88, but faced a steady decline through July and August, reaching lows near 1.4 in early September. Despite some sharp spikes in both directions, the overall trend has been downward. The most recent trading sessions have been especially turbulent, with dramatic price swings and heavy trading volume. This sets the stage for a closer look at what's driving these moves. Volume analysis reveals several extraordinary trading days, particularly on September 16 and 18, with over 114 million shares traded each day. These sessions saw the stock spike to 2.71 before pulling back to close at 1.98. The relationship between price and volume suggests that major institutional orders were at play, driving the most significant price moves. Such high volume combined with volatility often signals either a battle between buyers and sellers or news-driven events impacting the stock. Looking at the moving averages, the short-term indicators like the SMA5 and EMA5 are both below the current price, suggesting a short-term bullish momentum. This means that at least in the immediate term, buyers have stepped in and pushed the price higher. However, this short-term strength is set against a much larger backdrop of decline, which we'll explore further in the next scene. We shift our focus to the medium and long-term moving averages, the picture changes dramatically. The SMA 200 and EMA 200 are far above the current price, highlighting the severity of the recent decline. This wide divergence between short and long-term averages suggests that, while there may be a recovery attempt underway, the stock remains deep in a long-term downtrend. Investors should be cautious, as the long-term trend still dominates. Technical indicators like the VWAP are also telling. The VWAP at 4.7798 is well above the current price, which is a bearish signal from a broader perspective. While short-term EMAs are higher than SMAs, indicating some recent price strength, the extreme divergence between current price and long-term averages reinforces the idea that the stock is still in a strong downtrend, despite recent volatility. Linear regression of closing prices over the past 3 months shows a steep downward trend. The stock has traded below this regression line for most of the period, and even with recent spikes, the current price remains below the trend line. This statistical analysis suggests that, despite some short-term excitement, the overall weakness in the stock persists and recovery is far from confirmed. Given the extreme volatility and the closing price of 1.98 on September 18, the opening price for the next trading day is likely to be in the range of 1.9 to 2.05. This wide range reflects the uncertainty and potential for either a continuation of the recovery attempt or a sharp reversal, depending on market sentiment and any new developments. Key resistance levels for APVO are at 2.55, 2.71 and the psychological level of 3. Support levels are found at 1.77, 1.42 and 1.32. With the current price at 1.98, the stock is closer to resistance than support, suggesting a potential test of resistance in the near term. Intraday movement patterns indicate extreme volatility, with large price swings within session. APVO's intraday patterns are marked by extreme volatility, with large swings in price during trading sessions. This makes it a challenging stock for both short-term traders and long-term investors. Such volatility can present opportunities but also increases risk, making it essential for traders to have a clear plan and risk management strategy. Based on recent price volatility, the average true range ATR14 is estimated at 0.4 to 0.6. This suggests that for the next trading day, the potential high could be around 2.4 to 2.6, and the potential low could be around 1.4 to 1.6, using the current price of 1.98 as a midpoint. This wide range highlights the uncertainty and risk involved in trading APVO at this time. In a bullish scenario, if APVO breaks above the 2.55 resistance level with continued strong volume, it could quickly move toward 2.71 or even higher. This move would likely be driven by short covering and momentum traders jumping in. However, for this scenario to play out, the stock needs to maintain high volume and show sustained buying interest. On the flip side, if APVO fails to break resistance and shows signs of rejection, it could pull back sharply to the 1.77 support level or even retest the 1.32 low. This bearish scenario is more likely if the recent volume spikes were driven by short-term speculation rather than sustainable accumulation. Traders should be alert for signs of weakness and be prepared for sharp reversals. Neutral scenario could see APVO consolidating between 1.6 and 2.2 for several sessions. In this case, traders would be digesting the recent volatility and waiting for clearer directional signals. This period of consolidation could set the stage for the next big move, so it's important to watch for changes in volume and price action. Conclusion: APVO is attempting a recovery from extreme oversold conditions after a severe decline. While technical indicators show some short-term bullish momentum, the stock remains in a strong long-term downtrend. Extraordinary volume in recent sessions could signal a capitulation bottom, a short squeeze or news-driven events. Traders should approach with extreme caution due to the high volatility and risk of sharp reversal. A true trend reversal would require sustained price action above key resistance levels and decreasing volume on pullbacks, indicating accumulation. Until then, APVO remains a high-risk, high-volatility play.